Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, and we're going to look at a quarterly recap. In fact, we're going to look at a semi-annual recap because we're moving into July. Half the year is over. Kicking off third quarter here, Tori, why don't you tell us what's been going on in the markets over the last week, over the last couple months, and over the last year?
You got it. We've got a little price action today, which we'll dive a little deeper into here shortly. But gold's up 2.7% since our last recording, and it was up 4.7% over the quarter. And that's adding to its obviously strong first quarter. So gold up 12.7% at the end of the quarter year to date. With today's move, it's up over 15% so far this year. Silver up 6% this week. It was already up 17% for the second quarter and 23% for the year. So now we're back up, inching closer to that up 30% year to date. Platinum is the one that's down today, down 1.5% for the week. But it had a strong quarter, up almost 10% at 9.7% for the second quarter, which actually now is down for the year, down about 1%. With where we sit today at the recording. I'd consider that pretty flat. And then finally, palladium, a huge rally today, up 10% today at 1,050. It was down 4% in the second quarter and 11% year to date at the end of the quarter. So now it's almost flat. It's also down 1% along with platinum. So those two industrial metals bringing up the rear, but trying to flirt with positive territory.
Yeah, and following up on obviously a pretty strong showing so far this year for the metals, the equities market keeps chipping along as well. It's almost like they're kin, right? Commodities going up, equities going up. So you're looking at the S&P up about 1.5% over the last week, about 5.75% this quarter, but a pretty significant showing over the year thus far. I think up about, 16%? Since the beginning of the year, 16.5%. So across the board, we're seeing some pretty strong movement up. It doesn't matter if it's equities, real estate's going up, precious metals are going up. I mean, everything's perfectly fine, right, guys?
Well, even the U.S. dollar's up.
Yeah.
Like, how rare is it for us to see equities, metals, and the dollar index up year to date altogether? That's pretty rare, but the dollar's up 5%. So far this year.
Yeah, so definitely a strong showing across the board. So economy is fixed. Grocery costs are probably nobody's worried about gas or groceries right now, I think. So I think realistically, we had a big jump in the S&P again today, which most of the movement over the last week actually occurred today. And you keep hinting at softness, whether you give it or not. I feel like I'm getting gaslit now at this point by Powell. I still like the guy, but what do you guys think? How much reaction are we seeing to that announcement today?
Well, when he came out and spoke yesterday, he was very soft in terms of concerns with inflation, right, Rob?
I mean, he's saying inflation is pausing in the first quarter. Now it's showing signs of resuming a disinflationary trend. And he expects inflation to be in the mid to low 2% range a year from now. I'm with you on that one, Miles. Feel like we're being a little gaslit.
Yeah, because if that happens, obviously they're building a case for cutting rates, right?
Yeah.
That's what they want. So, of course, the S&P is going to respond accordingly. And with rate cuts, gold and silver are going to respond. The precious metals are going to go up because that just means weak dollar policy. That's what you'll end up seeing turning that dollar index down, will we not?
Yeah. And the deficit spending is much higher than what was talked about last Thursday. Our deficits are continuing to expand. So we're being gaslit everywhere.
Well, and he did admit that. I mean, he kind of threw the U.S. Treasury under the bus, or elected officials. He said that the budget deficit is very large and the deficit path is unsustainable. Well, duh. I mean, we've been saying that. The whole world has been saying that. And so that debt sustainability should be a real focus going forward for the U.S. Treasury or the federal government in general, he said, and removing himself from it. They don't get involved in politics. That's the job of the elected officials. But all of that is saying, look, as far as what we're seeing from a success on the inflationary front, so far so good. We're not seeing that. We still feel as if some numbers are going to roll through and cause that disinflation to at least once again pause this fall, late summer, early fall, and we'll see what ends up happening. But man, is the whole world starved for U.S. lending rate cuts.
Oh, yeah.
Well, we're coming up a little bit past the 2 year mark now. We're 2 years and a quarter since the U.S. Central Bank began lowering their balance sheet, Rob, which is something you and I have
Right.
brought up pretty repetitively here. Every couple of months, we'll take a glance at the U.S. Central Bank balance sheet. So, with the June reporting now out, I'd actually like to congratulate them. We're coming up on almost a 20% decline. So, the thing I do continue to appreciate about Powell is while he does bring up the concept of course, I understand everybody wants to get back to lowering rates. We'd like to lower rates. Everybody likes free nitrous in the gas tank. Nobody turns down free money. But he's bringing up the same thing we've been bringing up for years. We have to do three things in this country. We have to lower the central bank balance sheet. We have to raise interest rates. And the third part, they're not playing ball. The federal government needs to curtail the spending. And we brought this up when we talked about government spending last week. Even though it has come down since the 2020 numbers, it's more this year than it was last year. So they're not on a straight line, straight path back down to parity. We're still overspending by a pretty significant margin every year.
Well, just because inflation is something that they feel like they're getting better under control, you know, that old adage that David McAlvaney uses, inflation is a runaway horse that you can rein in, Rob, Mr. Horseman, whereas deflation is a dead horse. You know, it's hard to revive. But the Services Purchasing Managers Index, that Services PMI dropped in June compared to May. So in May, it was almost 54%, and in June, it's 48.8. And the reason that's important is that readings above 50% in that index signifies economic growth. And so readings below the 50% is an indication of economic shrinkage, right? Or stagnation, if you will. And the greater the distance from that 50%, the worse the news is. So that's part of today's gold pop. But also adding to the positive environment for gold is the price pressures. To Powell's credit, the prices index did drop from May's reading. You know, it's only about 1.8%, but it's a trend in the right direction, something for him to lean on. But these services index and then the manufacturing PMI, the manufacturing purchasing managers index, also fell deeper into contraction territory. So economists are concerned, but that's not the Federal Reserve's necessarily main concern right now. So even if inflation starts to get in check and they cut rates, does not mean it's a viable, healthy economy. There are so many underlying fundamentals, geopolitics, and certainly the debt that we talked about and the spending and everything else that goes into why there's a bullish undertone to gold especially. But remember, if and when the economy actually starts to get hot, what happens, Rob, with the white metals?
Oh, they explode.
Yeah. And so now you've got an underlying inflationary environment with an actually hot economy, and there's your velocity of money and also your commodity prices taken off.
Good
Well,
point.
and what happens to availability of those commodities when that market gets hot and an extra, 3 to 5% of Americans start to care?
Disappears.
Yeah, it's gone.
Yeah.
So it's kind of funny. This summer, I've had this conversation with a number of clients here over the last couple weeks, is there is no better time to do something than when the waters are quiet. It's the best fishing. And you got to be fishing right now. It's the best time to get out there. The waters are quiet. It's summer. It's a 4th of July weekend. We want to be patriotic. We want to get out, eat the hamburgers and the hot dogs. I got a bunch of people coming over to the house tomorrow. I'm already stressed out about it. But what I really want to be doing is I want to be looking at the markets, because here's the equity market slowly creeping up when nobody's paying attention to it. Here's the gold price not taking the sell-off we wanted it to take this year. And the summer's half over already. In fact, gold, moving back to the charts, long intro today, sorry about that, guys, but moving back to the charts here real quick. Granted, on a short term, we're just talking the most recent decline, which kind of started back at the peak back in the middle of May, end of May. We had kind of this nice declining floor to ceiling trend line that we just broke above today. So we put in a higher high double bottom at that 382 fib. We talked about this a week or so ago. We've now put in not quite a breakout high, but kind of one of those first little stair steps that start arguing gold could be moving to a higher price. And I'm telling you, every week that goes by that we don't go down to 2,200, I stop thinking we might.
Yeah, less and less likely. I agree.
So multiple higher lows on the downside. The first floor back at the beginning of May, the second floor back in the beginning of June. We had another one at the end of June, and now we're pushing back up. We're about to put in a higher high. You know, you look at the high back on June 21st, we're about to push above it. And we start doing something like that, we might get some bounces back up. And then all of a sudden it's fall. We go into the fall at $2,500 or $2,600 gold instead of 22, and it's a whole different gold market next spring. I don't know about you guys, but I'm excited. Someone else say something.
I'm with you, Miles. It's looking really good.
The eternal pessimist is excited. Can you guys please just share in the joy with me? Are you so shocked that you don't know how to respond right now?
Yes, I was shocked. But, honestly, gold is amazingly strong. We should have hit 2280, 2220, somewhere in that ballpark, and it doesn't look like we're going to.
It doesn't want to.
It can't even break 2300 to speak of.
Hardly at all, right? I mean,
Yeah.
the charts last week showed, 5 or 6 touches down just below at 22.95 and change. But you're right. This is one more fundamental. When do you see bond yields climbing and gold climbing and the equities climbing and the dollar climbing?
And the dollar climbing.
You guys, this is like unbelievable. To me, it reeks of uncertainty, concern across the board. And again, maybe it's geopolitics, maybe it's just domestic politics driving it. But the bond yields, the 10-year yields up over 14%. That means gold should be down 5 to 10% this year.
Yeah.
And instead, I mean, here we are talking about it being up 15%, just like the bond yields. That's shocking to me. So do we want to pull back? Yes.
Yeah.
We want those entry points. Miles promised them last week. And
I
all of
control the market.
That's right. And
But
all
it's
of your
not
target
happening.
prices.
It is not happening. We've got to deal with reality as reality is, not what we want it to be. Fundamentally, gold is unbelievably strong.
Yep.
We're right at 2360 right now, 2355. We're going higher.
Yeah, there's a lot of summer left. We've got to chop sideways, as you said last week. We're going to do some chop, as Eric says, too, here. And yet we've got this domestic political thing playing out, right, to where now everything is new. Just when you thought that there was certainty in the candidates, there's uncertainty there now as well. And with that uncertainty comes completely different platforms, agendas. Who knows what transpires going forward here, whether or not one or both candidates are not at the top of the ticket anymore. And suddenly you're going to see gold, respond accordingly to that too. And the equities markets get negatively impacted.
Yeah, and like Miles said, we're halfway through the summer. We should be seeing softer numbers. We're not. Every dip down is higher than the one before. This is setting us up, as Miles liked to talk about, that stair-stepping higher. And yeah, it's going to stitch back and forth a little bit, but we're going higher.
Well, there you heard it. We're going lower.
Yeah, technically I am O for optimism, so I kind of just doomed us. But hey, just for fun on one last final note, Tori, just because you brought up when we were looking at the weekly and the quarterly annual numbers earlier, silver ratio 92 in February,
Yeah.
72 in May, bounced back up to 80 last week, and we're back down to 77, 76 today.
That's
So
right.
the bounce we got out of that gold silver ratio, if we see that gold silver ratio decline, and silver's kind of on a tear today. I just glanced at the price while we were recording. We're up to 30.60 now. So silver's back up, strong up over $30. Yeah, we get a little bit more down on that, or you get another 50 cents or $1 on the silver price, and now we're starting to push under the lower half of that ratio chart.
Well, think about that. That's a 3 percentage point ratio contraction in one day, despite gold being up 3%, because
Right.
silver's up 6 in one
Huge.
day. So we're going to have to do some deeper digging as to those underlying fundamentals. But that's a huge day, and it shows you what silver's capable of, not only in the short term, but you string some of those days together, and that's where we get that 35-plus performance since that February low. And that's what we need to continue. We need silver to stay awake, stay alive, get its run, because far more important than the spot price climbing is that ratio contracting for our clients, because that compounding ounce effect is what gives you that exponential growth in your metals portfolio over time. That's our specialty, right? The rest of this is just tracking.
And we're certainly doing the best we can to do that tracking, Tori. And we're trying to reach as many of our clients as we can. So if you haven't talked to your McIlvaney Precious Metals broker in a while, give us a call. Let us take a look at your portfolio, see where you're sitting on some of these ratio moves back and forth, and make sure that you're situated for what we know is coming right around the corner. So we appreciate you joining us this week on an Independence Day week. So thank you so much. Happy 4th of July. Happy Independence Day to everybody out there. We hope you have a wonderful and safe holiday with your families and getting ready for the second half of the year pending just after. So thank you again. If you liked what you heard, you can hit the usual YouTube buttons below the video. Better yet, why not head on over to our website at McIlvaney.com. You can also find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. And like I mentioned, if you haven't talked to your ICA broker in a while, it's time to do so. We can be reached at 800-525-9556. Thanks for listening and have a great week.